Okay, so good evening, Emmanuel. So yeah, we'll continue from where we stop. So, like we said, we talked about in our last topic. We talked about the basics. You need to know what is forex, type of forex currency, the pair currencies with attached to forex. Okay, we talk about the leverage, the pips. Do you understand? We talk about what's it called and the standard lot size. Okay, so these are the basics, but now I'm so sorry that I haven't been able to you know dish out this video to you, but in my own side I'm sorry, but the reason is that yes, I'm a student, and as a final year student it's been a roller coaster because but let's not talk about that. That is my business, because if I didn't wanted to go to school, no need of me writing jam. So I have to I have to apologize to you. I'm sorry. So do you understand? There's no any reasons, but I'm a student. Things have been hectic up and down. So I out of all these things, although the struggles and the stress have reduced drastically, that is why I cover out time to teach you these chat patterns I've been delaying and been procrastinating all about because of what I have in my hands. So yeah, we were talking about the chat patterns. So we have different type of chat patterns. We have the falling wedge, the rising wedge. We have the reversal pattern. We have the double bottom pattern. We have the double top pattern. We have the triple top pattern. We have the triple bottom pattern. When I say the reversal pattern, what I mean is that okay, price was in a trend, in an uptrend, moving up, forming a higher high and higher low. All of a sudden it changes due to some condition in the market. The price started going down, forming lower low, lower high. Like you just change the direction. Do you understand what I mean? That is what I mean actually. So today I'll read out what we have. So here is saying that sorry here is saying that a rising wedge forms when price moves higher with a converging trend line, signaling a potential bearish move. A falling wedge occurs when price sorry I don't know when price moves lower with a converging trend line, indicating a potential bullish move. Both patterns reflecting a decreasing momentum before a breakout. Look at what this thing is doing. This is just a typical drawing actually. This is a falling wedge. It was going up, and all of a sudden it started ranging inside a convergent trend line before it breaks out. So I won't use this image to clarify, but this one will be more understandable. I don't know whether you can see this one clear. Look at it. You see it. This example of a falling wedge. A price is in a uptrend direction, forming a higher high and a higher low. All of a sudden there was a falling wedge. Like this trend line here made it look like a wedge, a falling wedge, making the price consolidating. It's ranging within. You see that red trend. You see it. It was ranging in between the trend line before there was a breakout from the trend line. There was a breakout from the trend line, continuing the direction to the upward direction. You can see the red breaking the trend line, moving to the upward direction like it was moving earlier before it started ranging in between that trend line. Do you understand? At this trend line, market, the buyers and the sellers are struggling. Who will push the market up or who will push it down? If this trend line now, if this red now decided to move down, that have changed. It's not more a falling wedge. It's not a reversal trend line, because it was in an uptrend. All of a sudden it was ranging in between the trend line, and it breaks down. It's not a reversal pattern. Do you understand? It's now a reversal pattern. I'll be giving you an illustration, I'm just showing you something, okay? But here in this situation, this condition, the price was moving up and it started ranging, forming a wedge pattern inside that trend line, making the market the price was consolidating within the trend line before it breaks up. And since it breaks above the trend line, that's forming this green arrow going up, that means it's a continuation, a bullish continuation after that falling wedge, after that converging movement in between the trend line. Do you understand? So I'll be going over to my board to illustrate more on what I'm saying. So yeah, so you won't be confused. Okay, thank you. So yeah, so over here to my dashboard, we'll be talking about the chart patterns. Okay, so let me write it down for you. Chart pattern. Okay, this is a chart pattern. Let's go. We have the falling wedge. So I'll be writing down the one we'll be treating now. I'll be writing it down, the falling wedge and the rising wedge. So I'll be writing it. This is the major one we need to know. And I'll go ahead to show you in the chart, in your MetaTrader 5, when you see so that when you see a falling wedge, you will know. When you see a rising wedge, you will know. Do you understand? Thank you so much. So I'll go to write the rising wedge pattern and the rising wedge pattern. These are the two chart patterns we'll be talking about today. Okay, I'll drop the other ones. We have the reversal, like I told you. We have the reversal pattern, whereby, like I told you, the reversal pattern, whereby the price is like forming a higher high and higher low. All of a sudden it changes, start going down, forming a lower low, lower high, lower low, lower high. Don't you see the price have changed? From here it start going down. Have you seen it? Start going down. It was bullish here, it was bullish here, it was a bull here, now it's a bear here. I want you to understand this is the example of a reversal chart pattern. Do you understand? But this is not what we are going to be talking about. So today we'll be talking about the falling wedge and the rising wedge pattern. Okay, the falling wedge pattern, okay, is when a price is on a bullish, in a bullish trend. Do you understand? Like this. Let me give a typical example. The price is moving like this. Do you understand? The price moved like this, and all of a sudden it formed a wedge, a falling wedge for that matter. This example of a falling wedge pattern. Okay, falling wedge pattern. This is example of a bull continuation, a bullish continuation. Okay, a bullish continuation. I just know it's a continuation I mean here. So I'll clean it now. So I will draw this thing where you see it. A falling wedge. A price move upward, just like this arrow I draw now. And all of a sudden, price start ranging, forming a falling wedge. What do I mean by a falling wedge? It start forming this. See? It start forming this. Do you understand? It start forming this. If you use your trend line now, you map it out like this. You will notice, okay, this is a flag. Wait, I want to make it more, let me make it more understanding. Wait, this is not a falling wedge. I don't know how to draw it well now. You understand? Like this, like this, like this, like this, like this. Do you understand? I want it to have a triangular shape. Example. This is a typical example. Wait, let me clean it well so I'll show you. Let me clean it well so I'll show you what I mean. Okay, this is, I want it to form a triangular. I'm so bad in drawing now. Pardon me. Pardon me, please. Let me clean it well. Sorry. Just like this. You see, this is my trend line. Just I'm trying to, do you understand? I'm trying to illustrate it, but for you to understand. But I don't know, my pen no green, my draw this thing well. Let's say this is a bullish trend line, going up. This is an uptrend. Okay, this is a typical uptrend, because if you see it in a chart, an uptrend is like this, higher high. Like if you go to your MetaTrader 5 now, a bullish trend, an uptrend is like this, higher high, higher low, higher high. You see that this high was breaked, and it continued going up, and it reversed and go down, and it goes up. Do you understand? This is example. This example in a chart, like now, as I draw it straight, it doesn't look straight. If you go to your MetaTrader 5, the chart, an uptrend doesn't look, a bullish uptrend doesn't look like straight like this. It must go up and reverse and continue breaking the previous high and continue moving upward. Do you understand? Let me show you in a chart how a bullish trend look like. Remember, I've not told you what a falling wedge look like. Do you understand? It's just that I'm trying to make you understand so you can follow. Okay, goes up like this. Sorry, in a chart in your MetaTrader 5, a bullish trend, an uptrend goes like this: a higher high, a higher low, a higher high. You see, it was going up, it formed a little retracement and continue going up, breaking the previous high. This is the previous high, before it went down. Do you understand? And it come again, retrace a little bit and goes up again, retrace a little bit and goes up again. You see, breaking the previous high before the other one, the previous high. This is how, this is how a bullish uptrend look in a chart. If I'm not lying, this is how it look in a chart. Do you understand? This is how a bullish trend look in a chart. Do you understand? I'm just using trend line to underline it down, but I hope you understand. This is what it look like. Do you understand? This is just what it look like. Do you understand? This is what it look like. Do you understand? It just break the previous one. This is just example what it look like. So I'm trying to explain what falling wedge is. Remember, I'm just trying to make you follow along so you don't get confused. So I'll be giving everything in detail so we don't make mistake, because I know we are new to this trading world. I don't want to make you start. I want you to know the basics before we just go into the main thing. So the falling wedge is like this. I'm just using a typical drawing, like remember, like I told you. So this is a typical drawing of a falling wedge, like that. Like they're saying, it goes up, like they said, it goes up. It's just like an uptrend like this. Do you understand? Using typical drawing, just my drawing like this, is straight. You understand? But all of a sudden, it formed a falling wedge. Do you understand? Let me give you, okay, like this. It forms a falling wedge. Okay, like this, like this, like this. See, this is a falling wedge. It formed now. It will look like a triangle going downward. Okay, I want the trend line. This thing I marked straight is kind of a trend line, but I'll show you in a typical. I'll give you an example using MetaTrader 5. When you see it, you will know. Okay, so I don't want to confuse you. Okay, this is how it look like. This is example of a falling wedge. Falling wedge. Do you understand? A price is moving upward, and all of a sudden it started ranging. Do you know? It started ranging. It started consolidating, forming a condescending structure. Because this thing look like it's falling down. It's condescending. It's going down. It's not ascending. Do you understand? It's forming a condescending structure. Pardon my English, please. I'm not a British. So when price is condescending. It is trapped in between the trend line. These two trend line now. You see, this is the trend line. Wait, sorry. So when the price is condescending, do you understand? The price of the market like this now that form this wedge is trapped between this trend line, these two trend line. Do you understand? Until there's a breakout. Do you understand? Price is like it was bullish, it was going up. All of a sudden, it formed a condescending or a falling wedge pattern. So if you use your trend line, you map it out. The up one, the up trend line, the down one. You see that price was condescending. In between, inside this trend line, in between the two trend line, price was like moving, like fighting. That is, during this period, I don't advise you to trade. No expert trade during this section, during this moment when price is ranging, or when the bulls and the bears are fighting. Because at this zone now, it's not in an uptrend, it's not in a downtrend, it's just condescending. This means that the buyers and the sellers are fighting who will push the market upward, or who will push the market downward. Do you understand? So no one trade during this period. Like me, I don't trade. Because if we start using that trading section, like we say, during that trading section, I don't know, I talk about the seeding section. During seeding section, this is what the market is always doing, ranging. Like I talked about it, you can go and take the previous video. So I'm using it to impute it here. I'm using to explain this following wedge here. Price is like ranging. Do you understand? Sorry that I draw this second round. Let me clean it. Price is ranging. Do you understand? So it's fighting who will take the market up and who will take the market down. But yeah, it's called a falling wedge, definitely. So during this period, they are fighting. The bears and the bull are fighting. So anytime market approach the downward, market goes up like this now. Market anabiagoto na obago. Oruhana auto channel this trend line never obago. Auto chen ke no nenu obada. That is what price is just condescending at this particular moment. Do you understand what I mean? Auto cha the upper trend line obadata. Auto cha the lower trend line ama kenane obago. Do you understand? So market is condescending. They are fighting. The bears and the bulls are fighting. Who will take the market? Who will push the market? And when price touches the lower trend line, the buyers push the price higher. That is why break above or break below trend line shows which side has taken control. So this is just exactly what I'm talking about. So they'll keep on fighting. All of a sudden, the bears push the market above this trend line like this. If you get, this is a signal to show you that the buyers have win. So this is a continuation of the bullish trend of bidogo bago form on the higher low bago. Do you understand? It start going up after ranging. This is example of a falling wedge. No one will explain it this way. I'm explaining it because I'm trying to break it down so into tiny pieces so you understand. Do you get me? So this is all I'm talking about. This is the falling wedge and the rising wedge. This is what I'm saying in essence. Do you understand? Let me clean it again. So during this period, the market actually fight. The bullish push the market up, breaking the trend line. So now, market break the trend line. Now, if I want to enter the market, I won't enter immediately. It breaks it. I'll wait for a reversal. Just can market retrace it to that particular position or break it. We could be able in Ghana lower time frame. One way some confirmation I'll get, knowing fully well that this is a continuation of a buy trend. I'll just push it up like this. Market abago. Do you understand? But some people, once it breaks it out, some traders, once it breaks the trend line, the trend line above the current price, upper on your buna, a tier market, a put or the other put to position, they will start buying immediately. But as an expert, if it's me now wait for you. Mark here, I'll go and mark out my demand, my what is it called? My supply. I think this is it. My supply area. So if you comes here, if price decide to come here, I'll push it up. It goes up. That is what I'll do immediately. Or it comes here. It might not touch my supply zone. It might go ahead to touch. Wait, it might go ahead to touch my other block. Another block is a block that cause an impulsive movement to the upwards, breaking the break of structure, breaking a structure up to the downwards. When we compare touch my other block like this or small, like it must not touch my supply area. I'll talk about, don't worry, we'll talk about the supply and demand area. You understand it well. But here I'm talking about the chart patterns. So people will wait if you come in here inside the trend line that it breaks above, it goes up like this. They will enter here. This is their entry position. They will take profit. When they scalper, some people will just leave it. It touches another kind of, let me say, another supply zone. Do you understand? That is it. I'll enter here and I'll take my profit here or here. Maybe take profit 1, take profit 2. It will be here. We have made the profit for the day. Do you understand? I hope you are understanding what I'm saying. I'm just telling you in essence how to enter this trade in case if you want to enter the trade. But here I'm talking about, here in essence, is just the falling wedge. Nothing else. When the price is consolidating, in a condescending pattern, in a condescending structure. Price was bullish at first, forming a higher high and higher low, but I'm using a typical drawing, so I'll just do it straight. Do you understand? All of a sudden, it started condescending, It started ranging, consolidating inside this range, like this. This is a trend line, like I said. This is the trend line below. This is the trend line above. Sorry. This is the trend line above. Okay, this is the trend line above. So here, when price goes to the trend line down, in between this trend line now, they are consolidating. They are fighting. The bulls and the bears are fighting, waiting for who will take the price down or who will take the price up. Do you understand? So we don't know what the market is predicting. That is why this is the reason some people don't know what they're doing in forex. And people call forex scam because they don't even understand the mechanism that goes inside this thing. Do you understand? So actually, at the end of the day, due to that's why it was called a falling wedge. It was falling all of a sudden. The buyers won the fight between them because Oru na neighbor. The trend line in the downside, it move up. It touched the one above. The sellers push it down. It touched the trend line below. The sellers, the buyers move it up. It touched the one above, the trend line above. The sellers move it down. So in essence, this is what I'm talking in essence. There's nothing much. So after the processes, price, gain control. The bullish gain control, okay? Because that is why it's called a falling wedge. After condescending to a particular extent, after fighting in between the range of the trend line, the two trend line, the buyers took control of the sellers and moved up and retrace, and retrace. If those that want to enter the market now, assuming you want to enter the market, I'll wait for a retracement, then I'll move out. Upon now, because there is something we call a false breakout, whereby the market will just fake a breakout, doing as if it breaks out like this, up to make this thing. Okay, the buyers and the bears are fighting in within the range of the two trend line. Okay. So all of a sudden, there's a false breakout like this, or break it out like a normal. Some traders might think it is time to buy. That is why I told you it is good. Market or break it out immediately. Don't be in a hesitation to go and buy immediately and put your stop loss here. And we can take stop loss here. It says you take profit above here. What of if this thing break out now and go inside and later after or break it out or data basically any range if we this causing an inducement, forcing you to, triggering you to enter a trade. Whereas you don't meant to, you are not meant to enter, you manipulated it. Do you understand? So that is what we call false breakouts. False breakouts. Okay. When price break a particular range, thinking forcing the traders to, triggering the traders to enter a market to put a position, thinking that you go to their favor. All of a sudden, this breakout now never or buy inside the range again, in between those trend line. Do you understand? Or better buy now range is in between that trend line. Okay, you break way out before. This thing break out before, but after some certain condition of the market, the price went inside the range and starts struggling within the buyers and the sellers again. Do you understand? This is what we call a false breakout. That is why, as a trader now, as an expert, once price break out like this, don't be in a haste. Don't be in a hesitation to put in your position. Wait for the price to retrace. Or retrace here, call batana. Now that previous breakout, that previous place, when we can mark a map or your demand, your supply zone, which is here. Okay, here. That your demand zone. I'll talk about the demand and the supply zone. That's the demand zone, but an impulsive movement, 3 candles forming a bullish trend upward or a downward trend, depending. But here I by a bullish, a falling wedge, which is price is moving upward and forming a condescending structure before it started moving up. So that is why, as a trader, I'm just telling you, in case if you want to enter the market, wait for a price. If it breaks out, because that's what we call a false breakout, and that will trigger you to hit your stop loss. Do you understand? So wait for the market to enter, to break out and retrace, maybe touching. You can pour out your demand, your supply zone. You might pour out. You might pour out like this. Okay, you check a price. That demand zone be able here map out, cause an impulsive move to the breakout, like ever cause to break out. You understand? You just map it as your supply zone, waiting for price to touch your supply zone. If it doesn't touch it, okay, rarely trying to touch it, you just put in your position. You understand? For me, and then we gets it for the candles coming down. If you know the week or that be with TK. Do you understand? The candles, maybe when it's coming down, you see that the candles is weak. It's forming some weak candles. We talk about the type of candles which is among this topic. After everything, the price moved up. Do you understand? Because I won't enter here where the price breaks out. I'll wait for a retracement. Here, I'll enter here, putting my stop loss here below my supply zone here, and put my take profit here. Do you understand? I don't anything turning me. Do you understand? Because I know this is what example of a falling wedge. Do you understand? This is what I explained so far. So I'm giving you an instance based on if you want to enter. That is why I gave this illustration here. But this is example of a falling wedge, whereby, let me say it again before I go to the rising wedge. Okay. A falling wedge is when the price is moving in a bullish trend like this. All of a sudden, it forms a condescending pattern or a falling wedge pattern. Okay, doing like this, doing like this, doing like this, doing like this, doing like this. It started falling, like forming a wedge. So if I use my trend line, I'm going to have trend line in your MetaTrader 5. Also, an instrument had a technical analysis. So yeah, trend line. On a deck, I want narrow like that, the long like this, not the straight. So I just want to explain to you before I continue. So falling wedge is actually when a price is in a bullish momentum. okay, in a upward direction. All of a sudden formed a consolidating a condescending pattern, or a consolidating or a ranging pattern, forming a wedge downward like this. Okay, sorry, forming a wedge downward like this. Okay, fair. So me using my trend line and I'll use it to identify this a falling wedge. Do you understand? You have to be like a triangle, like something that is actually falling. It doesn't look good. Let me clean it. This one look like a flag. Wait, let me show you. Okay, you have to look like this, like this, like this, like this. Thank you. So let me clean here. So you see it. You have to form it this kind of a triangular. I'm looking for that triangular shape, so it won't look like another thing. Okay, like this. See? So price was moving in an upward direction, and started ranging in between this trend line. This is the trend line I'm talking about. Okay, this is the trend line. Okay, this is the trend line. Okay, let me clean this thing. This is the trend line. Okay, so price was in between this trend line. So at this time or this particular moment, you are not even advised to trade, like I said earlier. So here, market, the sellers and the buyers are fighting who will take control. And at the end of the day, the bullish took control, breaking out this trend line, breaking above the trend line. This is what we call a falling wedge. I hope I got it clear now. So I'm talking in base on entry. That is why I was explaining this part for you. In base of entry now, okay? Let's say it is rising, it form like this, sorry, form like this, wait, form like this. There's a trend line. Okay, this is a trend line above, this one is below. So it breaks out. That means the buyers took control. The bulls took control. The bullish took control. So you wait for a retracement down. If you want to enter this market, actually, I won't enter immediately the market break above the trend line. I'll wait for a retracement like this into that trend line that caused, or that a demand zone that caused. I'll map out my demand zone. My demand zone might be inside this trend line itself. Okay, that caused the impulsive movement to the upward side. So there's a way I will see the candle coming down. You see that the candle is weak. It wants to go or continue to the upward direction. So I'll wait for a retracement. That's what we call a retracement. A correction. It breaks out. The bulls took it up. So you wait for a correction. After that correction, you continue going up. This is example. If you want to enter this market, do you understand? If it breaks out, because there's something called a force breaker, where your market breaks out, triggering the traders to enter the market, and all of a sudden it triggered their stop loss, and they lose that particular trade, because they were like, there was not enough confirmation for them to enter the trade. But here, if I was a person, once it breaks out, I'll wait for a reversal, a correction to the particular position that triggered the impulsive movement that caused that break of structure to the upside, that break that trend line. Price by the time I break that trend line, I'll put in my entry position, put my take profit here, my stop loss below the falling, below in between. Okay, comes now below the falling wedge, more inside the falling wedge. Do you understand? More, it will be inside that falling wedge. Every other place the price is consolidating, I'll put my stop loss here, or below the lower trend line. Do you understand? And that is it. We are done. This is a typical example of a falling wedge. I hope you got it right. Thank you.